All right, good evening, ladies and gentlemen. First of all, I do apologize for the technical delay with GoToMeeting. Not sure why there are these little technical glitches happening on the website and stuff, but hey, that's just what we live in. It is approximately 7 p.m. Eastern Standard Time on April 5th, 2017. This is Clueless Day Trading Frank. Full disclosure, this is purely for financial education, not for any solicitation or advice. And this session will be recorded and uploaded to the Clueless Day Trading YouTube channel that all of you should be subscribed to. Then always tell your friends that any of the free webinars and updates that I do are available to anyone to see via the YouTube channel. Could be very helpful to them on whatever they're trying to do on the financial trading side. And I have one other member here, Newbie123. Could you please identify yourself? Newbie? Okay. I don't want to waste any more time. Very important that when we do these webinar updates, and I intend to do more of them over the next couple of weeks and months. Very important that you have just invest 20 bucks in getting a cheap headset and a microphone, because interaction is extremely critical when I'm doing this stuff. But let me just start off here very quickly. With a couple of important and critical general comments, which I think matter a lot when we are doing what we are doing. So first of all, I know I sound like a broken record, but I do have to say that all of you have to really get into understanding to a large degree the charts that I'm putting across. There is a lot of hard work involved in every single line that I draw, every single level that I'm showing, and that is eventually what's going to determine whether you're happy, sad, whether you want to throw yourself out the first floor window or fall off the chair, and whether you're doing a lot of wowzers and texting me on the side and telling me how well you're doing. So it's extremely critical that all of you have a basic understanding on every single line that's been drawn. Years ago, when I knew very little about technical trading, I used to think, and even now, when I look at some of the charts from some of the so-called gurus out there, whether it's on StockTwits and many other forums that I look at, I can't even understand their charts. And I've said this before. So what I try to do is I try to draw some very specific lines in different colors, and I want to keep this simple, but what I call the sixth grader version, so that people can see what the points of context are. Because every single line that's been drawn here, in many cases, are either fulfilled, up and down, or they're the contact points where you have to take action. And they are and when I'm putting this across, I'm not just randomly just grabbing the cursor and saying, okay, I'm just going to put this line here so it looks good. I'm doing this because these are the levels that the black boxes, which are basically the algorithmic high frequency trading programs, are using for their inflection points to buy or sell. So what I find out in many cases, and it's not a complaint, because honestly there's nothing to complain about. It's you guys benefit from really being focused and understanding, and it makes me happy when people are doing well. Obviously, the point is that you have to understand that where the points of contacts are, and you can, as time goes on, and I know some of you have already got it. Like they say, some people get it faster, some people get it slower. There's nothing wrong with that. There's nothing wrong with that. Some people are slow learners. Some people are fast learners. Some people are lazy. Some people are not. Some people are very hardworking. Some people are stubborn. Some people admit their faults and move forward. I happen to be in that case. I admit my faults, I admit my deficiencies, and I move forward. Some people are fighters. Some people like to run away from challenges and obstacles. That's okay. The people who fight the obstacles and the challenges, face the ugly situations, and then change it around, become truly great traders, and in my opinion, based on my life, better human beings. So it all applies to what we do. So bottom line is that, and that's a mental calibration part. I hear a lot of excuses. And I give myself sometimes excuses. But every time I give myself an excuse and I see how much money I left on the table, I do tend to slap myself, figuratively speaking, big time. Because giving yourself excuses when so many precision charts and trades are being put in place is a sin, is a trading sin. And I mean that. I'm sitting here on it's 7:07. I like that. 7:07 p.m. Eastern Standard Time. I'm loving the fact that so many of you are listening to me talk and explain the things that I go through. Because one of the key things, and this is the mental calibration part, that one of the key things about what I do, which is very evident in my Clueless Aid Trading Service, which has been mentioned by other members many, many times, read the testimonials, is that I don't like, excuse my French, bullshitting. This is not an easy business. That's the reason why when things get tough, we don't hear a peep from anybody. There are members here who are very active and and they're still members, all of a sudden disappear. They give excuses, well, I didn't have enough capital, this and that. Look, there are points where I don't have enough capital relative to what I'm doing, where I'm upside down on a stupid Goldman Sachs trade which came from nowhere and it goes wrong. And then I fight to make it back up when the stock basically does that reversal candle. I'm just giving you one small example. A Regeneron trade, which has been complete bullshit. Okay? But I don't run away. I face the hard winds that come along our way, the challenges. And there are many members who just disappear and then they come back. I'm sorry, I sound like Trump here for a minute. Yeah, then they come back. And they say, oh, well, oh, wow, there's always the next time. Yes, there's always the next time. But if you don't do it this time, you're not going to do it the next time. So every single thing that you hear from my voice is a clean conscience. This is what I go through every single day. Not some fluff saying, oh, if you do this, it's going to be perfect. No, there is no perfection in the market. Look what happened today, which we're going to go on a technical basis. Humongous move. There was one key word, which I will tell you guys in a few minutes, that said sell, 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 sell. Now I sound like Kramer. So the point is, all kidding aside, this is serious business. I got loans to pay from creditors basically busting my chops. Okay? I got bills to pay, tuition, that some of you who have older kids know very well what college tuitions are. And it's life. You have to have a purpose. So cut the fluff out. But the only way that we can manage everything that goes in this, which if I showed it to my wife, which she never wants to look at the charts, or if I showed it to some guy who was, my friends who have nothing to do with the stock market, making millions of dollars doing other businesses, and I show them this thing, and they're like, you're a frigging madman. Doesn't matter. Because through this ultimate volatility, patterns that I constantly keep on showing, whether it's be a small intraday trade or a 48-hour trade or an overnight trade, we're still kicking butt. Yes, you will have losses. But I said something to a dear member of mine that I'll mention the name, Lady Luck. We were talking on the side. I said, if you can make twice more than what you lost, you will get way ahead in trading and in life. Let's stick to trading. Okay? Than you'll ever make. You lose 10 bucks, hypothetically speaking, on a trade, and you make 20 back. Keep on doing that 200 times. You tell me exponentially where you're going to land up. And that's not a Jeopardy riddle. That's life. That's trading. So what I'm getting at is this is what we're going through. And if you think that you can emotionally figure out, oh boy, here's a big red candle, it's all going to be over, and this and that, or oh wow, we're going higher, we're just going to completely keep on going higher. Well, you're mistaken. The only thing that keeps me sane and in the green is my charts. That's it. Because what I think and what I feel is important, because a lot of it goes into the sort of the gut feeling of what I know about the markets after all these years and having been worked on Wall Street for so many years, which I do take pride in. Okay, from parking my boss's car in the fish market back in the late 90s to rising to be somebody worth noting is worth something. So you learn a lot. But I'll tell you one thing, aside from those gut feelings, you gotta rely on technical, tactical charts. And that's what I try to do every single day with every single one of you. Okay. So point is, the wowzers and oh, the market's going to go to the moon and stuff, it means nothing. This is a, I will say it, dangerous market. And danger equals profits. Danger equals volatility. Danger equals profits. If and only if you focus, spend some time, and many of you have, on signing up for the advanced coaching sessions, and no, the ACS is not getting me rich. What's getting me in a better position and wealthier to take care of all my responsibility and my bills and my loans is my hard work in my family trading book. Period. The ACS is there to help you guys. Where the heck do you find a service that offers 40, 50 bucks for a training session that can get you thousands and thousands of dollars in hours, in minutes, sometimes, depending on what size you're trading? I know some of you talk to me on the side what you're making, and I am so proud of some of you. So that's all I got to say. All right. So get focused, guys. Because dealing with adults is actually, to be honest with you, who are stubborn, who just don't want to deal with it, deal with their deficiencies, and work towards more efficient robotic type of trading, is like dealing with a 4-year-old like my son was, who wouldn't eat any broccolis that my wife put in front of him, to the point that my wife was like, oh my God, I can't deal with it. And he turned out to be a fantastic kid. So let's move on. So let's get straight into the technicals. The quad system that I use, which is primarily based on heavy volatility. Of course, I use multiple charts. I use the TOS and all that stuff. But let's focus on this, because this is the most complicated, more complex one that I follow very closely. So looking at this, and I've shown this repeatedly, if you match what you're seeing in front based on all the storyline of the charts, because remember, this is the only service, Clueless 8 Trading, that gives you real-time online charts on an ongoing basis every 15 minutes, every 30 minutes, every hour, every day, every week, every month, going forward. So it's like a storyline developing. So the more you train your eyes to talk to your brain, you're going to be better off. That's what I try to do every single day. Now, sometimes patterns develop in my head before they actually happen. That just comes from practice and experience. Some of you are great skiers. Some of you are great pot makers. I mean, they're not like pottery makers. I don't know what it is. And you have the skill. Well, I'm a chart maker. That's what I do. So when I look at this here, every single line means something. Every single line has contact points. So let me go through this very carefully. And I know many of you have seen it over and again. But seeing is one thing, and understanding is a completely different thing. Every single line here. So let's start off. This was the flash crash. And just so you all remind yourself, and I'd like to remind all of you very strongly, that I even put a lot of captions. A lot of captions. And I'm going to pull this from one of my other screens. Just bear with me. There you go. Big thing, flash crash. That was a flash crash. They said, oh, it was because the healthcare bill wasn't going to pass. Yeah, that's one reason. Remember, news is only noise. There are certain signals which you have to listen to. It's like when we were little and mommy or daddy got really serious, we knew exactly when they were serious. Well, guess what happened today? Ma Baker, I'd like to call her, Janet Yellen, or the Federal Reserve Committee, said one thing, which is troubling, because the Fed has a stock price model. And they said stock prices might be too high. Are they setting us up for something? Yeah, maybe. You don't need to think much. When you hear something like that, I knew the market was going to fall. And the biggest $10 million programs, the multi-million dollar algorithmic high-frequency trading programs picked up one word: stock prices are too high. A lot of you guys are IT guys. Algorithmic AI, artificial intelligence programs pick up keywords. During earnings, they pick up keywords. Yeah, they could be wrong, but the initial reaction is sell. And then the humans, mutual fund managers and the hedge funds pick it up and run it up. Many times it's happened. What are the keywords? Missed earnings estimates. Forward guidance lower. What did Janet Yellen said? I mean, not Janet Yellen, but the Fed minutes show stock prices too high. And then the other thing was they might unwind the trillions of dollars on the balance sheet because they've been sucking up and buying the mortgage bonds and building up their balance sheet. They might unwind it. Simple English. What does unwind mean? They're going to basically sell it. What does that mean for interest rates? Maybe interest is going to go sky high. Not good. But the key word was, in my clueless 8 brain, stock prices might be too high. So short term, there's a knee-jerk reaction. And it might very well reverse tomorrow, for all I know. But I know that just from psychological perspective, it's going to be a little bit of a panic. It's not going to be a one-way crash down. So bottom line is, even on these type of charts, I put flash crash. I put big fat arrows. I mean, what more could anyone ask for? I put arrows when we bought here. And where it might go. Where we basically hit right exactly on that downtrend channel. I don't know if you can get any more precision than what I'm talking about. So let's move the screen out of the picture and let's move back. Let's stick to the algo charts before we move to the other screen, which I'm going to just show you a glimpse, which is investing.com, which is an extremely powerful trading tool, and it's free. The quad, you have to pay a little bit. And I am going to change the screen very quickly to this. Did everyone else's screen change?
Yes.
Good.
Yes.
Good. It takes a few seconds to refresh. So this is probably one of my masterpieces, honestly speaking, chart that I drew. You know why it's a masterpiece? Because I figured out what the icon was for the thumb down and the thumb up. I'm kidding. But look at this chart. Right off this, you could trade to kingdom come. All you need is 3 brain cells, not 5, not 1 million, but the brain cells have to talk to each other. And then you have to act. And this one showed that when we had a double bottom reversal after that massive flash crash, which definitively was a black swan event, I missed that big move down. That would be fantastic. But then I made this up very nicely on the reversal, which failed. They created a large inverse head and shoulders, which I've shown probably about 20 times now, and created a right shoulder right there, this being the head. And if some of you are hearing this for the first time, means you guys are truly, don't take me the wrong way because you know I'm straightforward, you shouldn't be trading. Just stay away from the markets, because this is not the first time I'm saying this or showing. So if you think you're hearing this for the first time, that it's an inverse head and shoulder and stuff, please just don't trade. Just don't do it. It's not worth your time. Okay? Seriously. And I know I might lose you as a member, but that's okay. My goal is to push people towards the truth, not to give them some fake promises of what they think they might be. All right? Some people are just meant to be traders. Some people don't have risk built into their brains. There's nothing wrong with that. Nothing wrong with that. Okay? So if you don't have the risk factor element built into your brain, then please do not be a trader or investor for that matter, because markets are about risk assets. That's the reason why they call equities or stocks risk assets. You want to make 2.35% on a 10-year government bond for the next 10 years? Feel free to do so. After 10 years, you'll get your money back with a compounded return, which is going to be reasonably nice at a 2.35% rate. But if you want to play stocks, you got to have the risk element built into you, okay? And that's just good suggestion from my part. So saying all that, so look at this. So you got the left shoulder here, right shoulder here, kept on showing it. Then a jagged movement up. Remember, these are all complex patterns, right? A jagged movement up, which can be constituted as a bull flag, which never broke out, which actually broke down. Guess where it came? It came close to the right shoulder. Now, I know it's easier to see these patterns after it's happened, but then I keep on showing them while it's happening because of my predictive analytics, of what might happen. That's one of the biggest strengths of my service, of what might happen. So it hits here. It looks like it's going to completely, where's my mouse? Okay. It looks like it's going to completely break down. Yes, there was a possibility it might break down here, right? And test this level. No, it didn't. It stayed where the reversal happened, right there. Remember, these are machines trading the market. It's not you and me. So if they saw a reversal here, whatever, they decided that that's the point where we're going to reverse from. And this is, of course, the E-mini charts, the futures, right there. And the futures dominate your happiness and your agony and your regrets and everything. Trust me. It's the futures market. It is what really determines. And you wake up in the morning and you got a bunch of SPX calls and you see the futures down 7 or 8. It doesn't feel good. It makes you a very confident, profitable trader. Is right off the bat, futures are up 7 or 8 and you're feeling like, yeah, that's it, baby. I just hit it. So your next trade is most probably has a high probability chance, more than 60% plus, of being a profitable trade. 60%, I used to say 90% of trading is mental. It's not. It's more like 60% or so. And then you got to put in the technical stuff, and then you're going to put in the luck factor, and then you're going to put in yourself. Okay? So bottom line is they decided that this was a point of turn. I showed it. And then it goes up here, and then this happens. Now, when I saw this happen, this was what, 2 days ago? This was yesterday. If futures are down 7 and stuff, I noticed one thing about this, and this is something, as you do this more, as you take the coaching sessions, as I explain everything, and practice, and time, you'll see this. There is something different in this move, this set of candles, because candle visualization is so critical. I can't explain it to you. It's like some of you who have certain skills, you know exactly what you're looking at, and like it's like a doctor looking at an X-ray or an EKG. They can see certain things that if they showed it to us, we'd be like, oh, great. You know, it's great. It's a picture of a black and white X-ray of a bunch of white bones. No, they notice the spot. They notice where the, you know, where the tumor might be, or that little spot that they don't like. Well, that's the same thing as short reading, guys. Okay, so when I saw this, I said, there's something not right. Then I looked at the prices of certain things early in the morning, and I said, do you know what this was? Can somebody tell me? Well, this is a very advanced question, okay? And if one of you can actually answer me, I'm going to kick myself out and put you in my shoes. Okay, this movement that happened, and futures were down about 7.5 points. I'll give you one hint. That was the day Google was downgraded, including one other stock. Can somebody tell me, like, futures down that morning, which was, wow, time is just like fleeting by. That was yesterday morning. And I said, you know what, I'm not going to worry about that, because this doesn't look like one of these. See the difference? It almost looked like a consolidation flag, but a little bit steeper. Can somebody tell me why futures were down that morning, yesterday morning? And don't feel shy, just answer it. Some of you are actually posting the reason why they're down actually in the morning, which includes Jules and Lady Luck and a couple of other people who are up early, read, you know, and I do appreciate that, because sometimes I'm running late. So can somebody tell me why futures were down -7 on this move down here? Remember? There was some down. How about I give you some more hints? There were some downgrades on what sector?
Oh, auto.
Nope. The auto thing came later. Auto thing was, that's a good answer. The auto thing was this candle. Well, let me just clean this out. This is the real deal, okay? What we're doing this session is the real deal, not some fluff stuff. Auto was this. See this red candle there? K-Bot?
Oh.
That was auto. Yeah. Oh, the auto industry is going to really slow down. There's going to be a spurry of
the chips?
Thank you. Who said that? Reed, right? Who was that? Reed?
Yes.
Thank you. You better stop drinking, Reed. I'm just kidding. Yes, it was chips. Just kidding, buddy. So, yes, chips. NVIDIA got downgraded. So all of a sudden, there was a slew of these panic attacks across the board. Like, oh my God, everything, all the chips are like all bad right now. We're all going to choke on bad chips. That's right. NVIDIA got downgraded, and that was, I believe, the same day that Google got downgraded, right? Reed?
Right.
Exactly. Except there was one fundamental difference, and I don't have the Google chart right in front of me, but it's there on my thing, and I'll dig it out as we go through this. And Google was down like 9 points. I'm like, shit. And I had a couple of calls on Google. Everything's looking great the day before. Bad. And then now it's downgraded. It's down 9 points, or 8.5. Yeah, you know. But it didn't bother me, because it was still within the channel. And I kept on saying it. And what did Google do that same day? It was only down 4.5 at the close. So anyway, yes, you're right. It was chips. So it depends, and this is more advanced stuff, but it depends on the caliber of what the downgrade's coming from. If somebody downgrades NVIDIA, it is less harmful to the markets overall than if somebody downgrading Apple, Amazon. When the Amazon downgrade comes from a major analyst who has been bullish on Amazon, feel free to short it to kingdom come. I'm telling you right now. Tesla gets downgraded, garbage, because most of the guys who downgrade Tesla, they've been downgrading the frigging stock since it was $100. I'm dead serious. But if a Tesla bull who has a price target of 400 in the stock downgrades the stock, and that's my job of filtering that thing out, because I know who these analysts are and what their characteristics are, then you obviously have something to worry about. But I don't know how you can short Tesla to any degree other than quick short trades because of way too much negativity on it. That's the reason. There is no positivity on Tesla. The majority of people overall are the same story. Oh, these guys are more than Ford. Yeah, great. So did Ford make batteries that can change the world? Did Ford send a SpaceX rocket, reusable rocket that can carry payloads up to the moon, whatever? Did they go into the solar business, which is honestly the future of many industries? No, I don't think so. They make Ford makes garbage cars overall, other than nice trucks. Okay, so no comparison. So anyway, so that will happen, and then see you later. So going back to it, there's no way that anybody who's following just prices, and this is one thing which has been my key complaint with a lot of people, and I know some of you are changing your habits, your bad habits, just the way I try to change my bad habits all the time, is there's no way just by looking at prices you can determine what this market is doing. You can, and that's where we're very successful. I'm very successful in identifying levels to what happens. So I talked about the fact that this flash crash, and it was my past video cast, okay? So this is a continuation of that we would go back and retest, or at least retest where we crashed from. The flash crash zone. What happened? That's exactly what happened. Is it a coincidence that the markets were pushed up to that level by the machines before Miss Yellen and the Fed minutes showed that? No, because the noise that comes out from the different fronts, and you guys have to understand it, the markets are completely manipulated. The markets are never fair. And nothing in life is fair. You all like to think, oh, I'm a good person. Why is this happening to me? No, life is not fair. You got to fight it. So the point is that why did the markets go here? And then the Fed meetings came because they wanted to take it up there. And why did they want to take it up there? Because the people who lost money on this side, the institutions, they wanted to make sure they could recover their money back. Period. So they did everything that they could do in between making excuses. Oh, this was the good news. Oh, the GDP growth was stronger. The U.S. is on a fast track to growth, which it is. The only thing which is ungameable is what tweets coming out at 5 in the morning for good old Donald Trump. That's ungameable. But aside from that, the markets did what they like to do. They recovered every single dollar that some of the institutions were lost. Okay? And that dollar amount was taken out. That is called resistance. What is resistance? At the point where you become even. That's why you have selling at resistance. And then the new buyers come in, and if it does break out, which it didn't today, if it broke out, then we had the higher levels to contend with, which I showed in multiple charts. But it didn't happen. So the bottom line is this happened. So let me stick to this chart for a second here. Something is going on where the Fed is worried. And this is not a question of good or bad, whether you like Yellen, whether you don't like Yellen, whether you're a Fed hater because you think the U.S. is a garbage country, we don't know what the heck we're doing. You know, everyone's got their own frigging opinions. Let's keep that aside. Because politics and markets, your emotional politics and markets don't mix. Stick to trying to do what making money is all about. Okay? I have my staunch beliefs on what certain things, the way it should happen and stuff. It doesn't matter. Money talks and shit walks. Okay? I learned that a long time ago. And Mr. Donald Trump knows that very well. And so many other very successful people in life. All right. So bottom line is that we are at a major resistance here. When this happens, you have to be careful. Not careful. You have to jump on it. You get a candle of this magnitude, and it didn't happen right away. You guys know that. We were holding up 140. We were holding up 145. I said it very clearly because I saw it on my internals on the next screen that we're going to switch over, which was the algo charts, as well as on the very simple SPX chart that I repeatedly tweeted out, where it showed, and I'm scrolling that down, which clearly showed, here's the one second. Everyone can see this? Yes? Everyone can see this?
Yes.
Okay. So you don't need to be a rocket scientist to figure this chart out.
Yes.
Okay. So no one needs to be a rocket scientist to figure this chart out, okay? Because I am not a rocket scientist.
Yeah. Frank, can I ask a question?
Not yet. Okay?
Okay.
Not yet. I'll have quite a Q&A in a bit. So the bottom line is the simple thing that you have to look at. Look at the frigging arrows. Number one. Look at the way this line is trending down. This is a daily chart. This is a daily chart of the, is this a 1 hour or a daily? This is actually the 1 hour one, okay? And it's clearly telling you that we're not oversold yet. So sometimes keep the mumbo jumbo of these advanced analytics and technicals aside and look at the simple underlying internals. First of all, the first thing you should be looking at is that what is happening on the charts on the bars. It failed to break that. I even put a red arrow there. Can't get any easier than that. If it broke above that, see you later. Doesn't matter what I think and what Yellen said. We were going to go and test this very fast. And it'll be quick. So there's a lot of agitation, a lot of churning around here. And then multiple things happen. The yellow line here, which is the 5-day moving average. And of course, you have to replicate this on your own screens. Remember, I'm a service that as a fast messenger on what might happen or what is going on. But you have to replicate it on your own screen. I've heard some mini complaints. Oh, I can't see your chart that well because it's a black background. Well, I'm so sorry to hear that. Why don't you frigging open your own machine and open it up on your side? And again, I'm smiling while I'm saying that. Okay? But seriously, childish excuses. Oh, I can't really see the chart. Well, try to get a bigger iPhone maybe. You know, get an iPhone 7, get an iPhone 6 Plus if you're trading off the iPhone. Or get a bigger laptop. Or how about a desktop with a larger screen? Costs $120 to get a 26-inch screen these days on Amazon. Okay? Because that's what you got to do. So anyway, so bottom line is that it's, and then you see the candle developing. And this didn't develop in 5 minutes. It took about half an hour. That's where the big gains came from. There's nothing wrong with you taking profits along the way because we don't know if the candle development is going to turn into a double barrel, bearish, engulfing double barrel candle, which, by the way, turned and stayed within the channel, this downtrend channel. And then it kind of bounced into that. Doesn't matter. Because the pressure, sometimes you look at it just, you all are very intelligent people. I've spoken to almost all of you, and you guys are very intelligent, but try to be more intelligent in what you see. So when you have that much pressure on the candle, what does this red candle mean? It means like somebody selling 5 E-mini contracts or whatever. No, that's billions of dollars saying, I'm out of here right now. Good luck. That's what it's saying. So respect it. Because this candle, yeah, there have been cases where this candle all of a sudden turned. But on top of that, I kept on saying one thing which I normally don't say. Can somebody tell me, just in a quick thing, and this shows your attention span, your attention to what I'm doing. what is the one word that I used right after the Fed minutes came out? Repeatedly on my tweets, other than the word hedges, which is going, hedge your long positions, or hedge means short. Aside from that, what was one word that I used quite a bit?
Sell large profits.
That's one word. That's actually a couple of words. But one word that I use, which I don't use at all, which could have made you shitloads of money. What was the word that I used? And if none of you can answer that, I swear to God, I'm just going to close down the service.
Warning.
Thank you for saving real estate trading from shutting down. Who? I'm serious. Who said that?
That was me.
I knew it was you, man. I'm sorry. I'm swearing. Fishy. Yes, warning, caution. Do you ever hear me using those words? Come on.
Oh.
I said caution. I said warning. And sell large profits. Go short. Sell. Guys, it had to be fish eyes who had to answer that question. This is the lesson I want all of you to just go away with once I finish my diatribe on what I do. None of you are focused. Because that's the first word you should have known that I kept on saying. I said it 3 times. What do I have to do? I'm tweeting it, right? Do I have to use Trump's tweet to like go out there and say caution? I mean, come on, guys. Wake up. When you hear the word caution, when you see the word warning, what is this? I'm just saying it for fun? I'm saying it to make a lot of money for you guys. So you get more confidence to do the next trade or stick with the same trade. I rest my case. Come on. That's really, really disappointing that one person actually remembered what the element of thing was. Trading and investing is about quickness of thinking. It is not about slowness of thoughts. It is not about sitting there doing analysis paralysis. Am I going to do this or do that? No. You got to act. You act. Yes, it might be a losing trade. It's happened to me. So what? You at least did what was necessary. Like I learned a long time ago on Wall Street, and if you don't knock on that door, you're never going to know what's on the other side. So please, for God's sakes, just focus a little bit more. It's really disappointing that aside from fish eyes, nobody could answer. But yeah, somebody said, sell large profits, of course. So when I saw that, that's the first thing that went to my mind. I said, go for it. Now, what some of you are doing is you're looking at the prices. Oh, the prices are not really moving, this and that. I'm looking at the internals. It's already breaking down. You see a crossover like that, it will reset here. Yes, it might not happen tomorrow, might not happen Friday, but will happen. Will happen. Now, what are we getting into as we cross over on Monday? What date time frame of the month are we crossing over? This, many of you will be able to answer. Yes, no, no response. What is Monday? Did I lose touch with everyone or what? What is Monday? What date is it?
The 13th? No.
13th? Okay, I think you need to recalibrate your date factor.
Sorry, the 10th.
10th. No, but you're new, so I'll let you pass. Many of you who have been with me and know exactly what I'm talking about, what is the week of the 10th to the 15th or the 10th to the 14th? What phase of the month is it?
Mid-month.
Okay, you're new too, so I'll pass. I know Fishy knows the answer, but so stop it. I mean, this is important. It's not like I'm quizzing you guys. I'm trying to help. What happens around the middle of the month?
Pullback.
Okay, does anyone have any answers, or they're all pissed at me like, oh, Frank is like, being stupid? No, seriously, what happens at the middle of the month?
Market
Mid-month
usually sells
resets.
off.
Huh? Mid-month resets, right? Who said that?
Read.
Okay. Jules should know that. And Vic should know that. I know Exita knows it. Yeah, mid-month resets. What is also mid-month in April?
Taxes.
Thanks. Somebody should be faster, unless you guys are all like, foreign nationals who don't pay taxes here, Yeah, taxes. Mid-month April. And today what happened? Mix that in with mid-month April is not a good sign. Period. End of story. It's a very negative period. Because right now, a whole bunch of mutual funds are sitting with fill in the blanks. Sitting with what? A lot of what?
Losses, I must say.
Bullshit. Profits. A lot of mutual funds, but at least you answered, so I'll give you A+ for that. A lot of profits on Amazon, on Tesla, on this, on that, and that. Yes or no?
Yeah.
Yep, exactly. Yes, they have losses too. No question about it. Now, what are mutual funds? I started my career at Putnam Investments and one post office square next to Fidelity when I came out of school. Okay, so I know I worked through it for 3 years and how the fund managers work and stuff. Learned a lot in between parking cars and getting coffee. Okay. So what do you think? Who runs? Oh, the fund managers run the mutual funds, but who controls the mutual funds? Mom and pop. Every other American has a mutual fund, whether through the 401ks or on their own. They see something like this going on. They got to pay some big tax bills. What do you think they do? They call up their mutual fund representative and say, hey, listen, I'm in that Voyager Growth Fund. I'm in the Fidelity Contra Fund. Hey, how about I sell 1,000 shares of that? Why don't you put it in the money market for now, and then I'll call back and I'll move that, and then I'll put it back into the fund. That is exactly what is going on now, and will go on through mid-April or maybe a bit later. Even though, in my opinion, April might turn out to be, but this Fed thing has put a different equation in the picture. Believe me, this is a black swan event. Might turn out to be, would have turned out to be a positive month, because April generally seasonally is a positive month after the mid-month selling is done because of taxes and such. So that's what these mom and pop do. Many of you have mutual funds. So understand the dynamics of actual money management. Mutual fund managers have no choice but to basically say, move money out and put money in the money market for redemptions. What are redemptions? When you ask for a check for $3,000, just giving an example, where the mutual fund manager has to have money in their checking account, known as money market funds, in order to meet the redemptions. Does everyone understand that? Yes? Does everyone understand the fact that a mutual fund manager who's running a $10 billion fund or a $5 billion fund has to have money in the money market fund in order to meet redemptions? What is redemptions? Means that somebody asking for money. Am I clear with everyone?
Yep.
Good, good. When you understand the basic concept, you'll understand how the market works, which will help you keep your profits or minimize your losses. So this thing going on here is just not good. Is it the end of the world? No. Maybe it's a 3% pullback, but 3% from 20,648 I'm actually looking at the closing print. We closed at 20,648. Man, we couldn't even dream of that 6 months ago or a year ago. Minus 3% brings us down to, I'm sorry, is a 600 point drop. 619 point drop, which brings us to what? 20,000. Is it the end of the world that we went back to 20,000? No. Is it something that can happen? Absolutely. What is a 3% correction from where the S&P closed at right now? And these are all on my charts. The S&P closed at 2352.95. So let's call it 2353. Minus 3%. That's a 70 point drop. Which brings us to 2282. It's not the end of the world. Yeah, it's going to feel like that if you keep on just, oh, markets are going to reverse and it's all going to go higher. No, 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 no. Individual stocks might do that. CMG could keep on going up 30 bucks just the way Panera got bought out $40 higher, which reminds me I'm a complete idiot because I was looking at the charts and I did not buy Panera, which I've traded many times before. Individual stocks might do that. Plug, which is a small spec play, second time in my career that I actually bought that stock, up 84% today. Yes, we didn't buy it yesterday, but I saw the news that Amazon is buying warrants to buy stake in the company. Come on, you don't need to be a rocket scientist to figure out if Amazon's even looking at Plug, which used to be a garbage company, PLUG. It's going to go to at least $4. And those options that I bought at 29 cents, 28 cents, 23 cents, they're at 42 cents. So those individual situations will work. I'm talking about the general market. So bottom line is that selective situations, which are what we call special situations, yes, that's a different story. But the overall market we're talking about. So going back to it, I'm going to switch screens. So looking at this chart here, just to kind of finish this off on this side, is it possible that we go to 23? One second. Choose. Okay. Is it possible that we come back and do this from where we are? Absolutely. Is this going to be a buying opportunity? Not because of the green thumb up. It's like the Irish thumb up, like, yeah, boy, let's go drinking and buying. Yeah? Yeah, I think that 2300 level or so should be a short-term buying opportunity. If we break 2300, just remember this and write this down somewhere. If we break 2300 on the SPX or 2317 or whatever, that level is, roughly give or take, we are in trouble. We're in trouble. Trouble meaning like I'm not going to be in trouble because I'm already prepared for some nasty situations coming and whatever. But you guys, if you're like too bullish or like, oh, markets will always bounce and this and that, well then, and not really focusing on technicals, just focusing on your little voices in your head or, prices and stuff like that, it's not going to work. That level, 2300, is a major, I actually made up that sign, danger sign. Below 2300 will plummet very fast because that's where a lot of hedge funds, a lot of institutions are heavily long. And that's the reason why you had this move. Once that breaks, it's going to be a waterfall decline, what we call impulse drops. Now, is it that all of a sudden we're going to fall into that right away? No, I don't think so. But then what the heck do I know? Because we rose from here really fast. Yes, in between zigzags and stuff. But look at that. So is it not possible that once we have now hit with a big sledgehammer on this side, that's a sledgehammer, okay? Routine. Yeah, we might bounce up. You might like, oh, yo, the market's really going higher. No, technically speaking, aside from all the other external factors that might move the markets up, which could be some concrete proposals coming out of the Trump administration on tax reform, on repatriation. Those can move the markets up, and Janet Yellen is going to be yesterday's history as to whether stock prices are too high, because those are more powerful factors. But aside from that, from a technical basis, we at least should test this level, which is pretty close. Should we bounce from here? I don't know, but we did last time, so I'll be on the watch. But are we going to completely break down all the way here? I don't know yet. But that is a very strong possibility during that mid-April scenario. Mid-April, like we discussed. Okay? So a move from 2340, and this is a question I'm asking you guys, down to 2317, that's 23 points, right? So 23 S&P, let me just stick to the S&P point. 23 S&P points is roughly how much on the Dow? Somebody please tell me. And if you guys, some of you don't know that, ask. Because if you don't know that conversion, you're in real trouble. What's 23 points? Let me just put it this way. One S&P point is how many points on the Dow Jones?
7.
Yeah, roughly about 6 or 7. Correct. All right. So 23 is what?
140.
You got to speak up a little bit more, man. You sound like I'm at a jazz club in New York City or something, man. Hello, 140. Like, come on.
160, 150, 160.
When you talk, be more assertive, okay? It's part of the trading mentality. I'm not saying anything bad. I'm just saying. Yes, you're right, sir. And who was
Yeah,
that?
because it's late here. Sorry.
Oh, okay. I'm sorry, man. Don't wake your girlfriend up, all right? Just kidding. So who was that who answered? Was it Vic? Vikas?
Yeah, yeah.
All right, man. How are you, Vic? Good?
Good.
All right. Good hearing you, man. Good seeing you. So yes, roughly 150, 160 points. So 150 and 60 points is right here. And that can happen, like Jules said and Lady Luck said, that can happen literally like within an hour tomorrow on some big blowout, maybe one more downgrade or whatever, a bad tweet at 5 in the morning from Trump, or somebody says, oh, drug prices are just really, really bad. We should get free drugs. I mean, not like real drugs, but medical drugs. Yeah. Next thing you know, we get a blowout. Apple says, oh, somebody says, oh, one of our Apple phones, just blew up on my hand. Couple that with another Tesla going up on fire. You get 150 points. I'm half kidding, but this is what the markets do. It's happened before, right? So we could fall 150 points. But this would be a huge buying point, okay? End of story. From a technical perspective, you would have this type of move here. But this is not good, all right? Just remember, sometimes you just look at it, and if it doesn't feel good, it's not good. Let me just get out of this screen here and switch to monitor number 3. Okay. So looking at some the things that I was explaining, when you look at this chart here, and of course when you look, I'm looking at a 23-inch screen, so easier on my eyes and easier to see, and the more you see, the better off you'll do in trading. Look exactly where it bounced from. Tell me somebody else who draws charts like this. And I'm not saying this so I can feel good. I'm not in the feel-good business, okay? I'm just showing you really precise levels. I had drawn these channels days ago. Once this channel was created, that's when these lines were drawn. These lines are not automatically generated by the quad platform. These are my lines, right? The structure. Look where it went. Exactly here, and there was a little red bounce. Now, correlate that, and this is how you have to think, and this is why the ACS sessions are so important. So correlate that with the fact that we went deep oversold. This is what? Can somebody step up and tell me? Because this is critical to what we are doing every day. What is this? What is
Fast
the?
stochastics.
Thank you very much. Fast stochastics. I hope all of you knew that. Okay? That's fast stochastics. So the fast stochastics get sold fast. Simple. So on this big move down, fast stochastics sold fast. Now what happens? I'm going to walk you guys through this for many of you who don't understand this. It's very easy to understand actually. Once fast stochastics get oversold, what happens? You get a what? Come on, it's not rocket science,
Small
guys.
reflex bounce.
You get a, aside from Vic, and yeah, so everyone said bounce. Okay, you get a bounce to where? Where is the next technical level that we can bounce from now that we hit the low? And it's not a guarantee, but I'm just saying a high probability trade. Fast stochastics basically went and touched, retested, like I say, the upper end of this downtrend channel. This is a downtrend channel known as DT. Remember, D for down, T for trend. All right. And you see the little green speck here. Futures are up right now. 1 second. Look at my other screen. Oh, futures were up quarter of a point. It's down 3. Good. I want futures.
Now it's back. Yeah.
So let me get back to this. And guys, I'm doing this because I like all of you. I do. Okay? Even though I scream and do boot camp style and this and that, but I do appreciate every one of you because you guys are all trying to be better at what you're doing. So am I. And I should be doing a heck of a lot better than I'm doing. Believe me when I tell you. After what happened today, and today is just one example, I should have done, and this I will say, this is behavioral game theory, this is clueless A trading. On myself, I should have done 5 times better than what I did. And it was still a damn good day. But I should have done 5 times better than what I did. And that includes all of you who should have done 10 times better than what you did based on everything that I delivered. Anyone disagree with me?
Oh,
Nope, right? Because if you can self-criticize yourself and self-improve yourself, you're not going anywhere in life or in trading. I'm dead serious. Trading is all about self-criticism, self-anger, and getting pissed off at every day of what you did not make. And everything that I say is what I feel and do. Every day I could have made more. And today I could have made a heck of a lot more and I still did great. And if you guys think, and I have tweets from, people tweet me and text me and they say, oh, well, I sold, there's always another opportunity. Those are all bullshit excuses to make yourself feel better. Because you did not do what should have been done. Somebody said, well, I know I'm a full-time job. Okay, great. Didn't you look at the chart before and see where I showed the levels? But you decided to just crap out because of whatever reason. In life and in trading, and believe me, trading has helped me become a better person. I'm dead serious. If you keep on making bullshit excuses to yourself, you're not going to get anywhere. Now you'll say, oh, I made a little bit, this, yeah, that's fine. A profit is a profit. A profit is a profit is the worst statement a trader can tell themselves to their brain, where they will never make the real money. Making, a hypothetical example, $50 in a profit where you could have made $5,000 and you say a profit is a profit is like putting poison into your brain so you can go nowhere. And believe me when I tell you, and I am not Tony Robbins. And I tell myself that every single day. Amazon, Tesla, look at these things, CMG, name it. Could have changed your trading lifestyle, made you into one of those monster traders where you just felt so good just playing with small profits on what you made. Did I achieve what I wanted to? Nope. Did I do well? Absolutely. Now, if you guys don't self-criticize and self-flagellate yourself, and I'm not talking about 50 Shades of Grey, all right? Whipping yourself with a bad leather belt. I'm talking about really mentally. criticizing yourself for what you're not doing, then please don't complain to anything, because you will never make the real money if you don't constantly tell yourself you could have done so much better. And you think this is a pep talk? No, it's not. It's coming from a guy who's seen more in life than all of you guys put together. All right, I'm dead serious. All right, let's get to technicals here. So this doesn't look good. But coming back to the question, I hope you have time to think while I was giving a little boot camp lecture to myself and to all of you. Okay, no fluff. Is once it gets fast toes oversold, what is the next directional level where it might go hit? And all the lines are drawn. Can somebody tell me? 23, 80,
60.
Axida, please.
Pivot.
That's completely wrong, by the way. No, what is the next immediate level that the market can bounce to? It's easy.
2357. 2357.14.
Absolutely. Who was that? Vic, right?
Yeah.
No wonder, man. You're taking all the jobs from all the idiots who never want to frigging study or do anything hard. God bless you, Vic. Exactly. Because this is the line that I keep on showing. What is this line? And Vic, stop answering. What is this yellow line with the thing cross, which I didn't put a marker in there for a purpose? What is this line?
Pivot.
Oh,
Pivot.
here's a jazz singer. Pivot. Yes, you're absolutely right. The pivot. Thanks, Jules. Jules is the best too. Jules is the silent killer. All right, just kidding. All right. Yes, the pivot. So that's the next level of thing. This is not rocket science. This is teaching you what algos do. So let me change the color, pen color again. So here, pivot. Now what happens about pivot? You move. Different resistances are here. But more importantly, and this is where, this is where you really have to put in some for your own work. And I teach all this, but I'm just sharing this with you. What is this yellow line? What is this yellow line? I always called it the trader's friend.
It's a moving average.
Yeah, so what? Everything is a moving average. What moving average? What numerical number?
5 days.
30, is it 5 or 34?
Five. Exactly. The trader's friend is your 5-day moving average. If you want to be instantly gratified in a good way, that's your 5-day moving average. When the 5-day moving average turns down, how many days of the week, trading days are there in a week?
5.
Thank you. Some people use 10, some people use 9. I don't know why. Good for them. I used to use 9 and 22. Like, for what? It's a 5-day. You got 1 week. If you end the week in a really shitty position, do you really feel good about your trading position? As you open up a nice glass of wine or whatever on a Friday? No, I don't. You want to end the week feeling like, okay, I did something. Exactly. The 5-day moving average. That's why I use it. Call me clueless, call me whatever. It's just what's worked for me. So I'm sharing with all of you. So the 5-day moving average is pointing down. So the best case scenario, the 34 and the 50 still hasn't crossed over. It's kind of still moving sideways. So today's event could be, for all I know, a 1-day event. Maybe Yellen basically makes other comments, or one of the Fed governors, the Fed governors come every single day, and says something very positive about the markets. It's hard to take back what they said today from the meeting, that stock prices might be too high, because the Fed stock price model, okay, is an important one. I don't think it's right. They've said biotechs were overvalued at one point, remember? And biotechs fell, but then they took off. So this could be the same story. But I'm just telling you, like, immediacy, what is going on. Also given the fact that the markets are pretty much up there right now. We're not at 2,000 S&P anymore. So yes, so the pivot is so critical. Above pivot, we move. Can somebody tell me, and I've already given the answer, what is the immediate move above the pivot? There are multiple moves aside from the green lines. The 5-day moving average, which is around 2364. That's why every one of you, it's not going to cost you anything. Do the free trial with Quad. See how much of a difference it makes to your own effective trade management. They don't give me a single penny because I'm referring people to them. Seriously, okay? The 5-day moving average, 2364. So if somebody's a real fast technical trader, they say, you know what, I'm going to put a stop somewhere around 2350, and I'm going to play a 14-point move here. 14 points on an SPX call, weeklies, is a good solid double on your money, if not more. That's it. Will it happen? I have no idea. It would happen, I'd be more convinced if moving on to the other very critical indicator, what is the S stock?
Slow
Slow
stochastic.
slow.
Vic, I'm going to ban you from answering any of the questions, my friend. All right?
Okay, going
Yes.
mute now.
Yes, no, I'm just kidding, Vic. You're a great guy. Okay. Yes, the slow stow. What is my nickname for the slow stow? What is my nickname for the slow stows? Mr. Slow Stow. Right? You guys don't remember?
Yeah.
Exactly. Call the slow stow Mr. with reverence, with respect. Because Mr. Slow Stow is of primary critical importance on a swing trade or a conviction trade. One Mr. Slow Stows, as I keep on showing, markers. And every marker that I put an arrow takes me approximately 5 seconds. You guys are not paying me for those 5 seconds, okay? I'm telling you, very critical. Once it gets down towards this level, that's why I already have it there. Somebody with 3 brain cells can see that I already have that put there. In other words, this has to come down here for a conviction trade. Conviction trade means something you can actually make some good money on without just being nervous every 3 seconds. This move on the slow stows can, on a 3-point up move on the S&P futures, can already be overbought by the time you wake up in the morning and brush your teeth. But this baby is what it's all about. And I've shown this hundreds of times. So once it gets down there and it has a crossover, or getting towards a crossover, okay? That's why I have the marker with an arrow, is where you go for the conviction trade. That conviction trade can last a day, or it can last sometimes half a day, or sometimes it takes 2 days. But it's a lot faster these days because every volatility is so rampant. Is everyone clear about that? So when I'm showing the slow stow still pointing down, what does that mean? It could already be oversold by the time we wake up tomorrow. If futures are down right now 3.75, so let's say futures are down 6 tomorrow morning, and the slow stows are already oversold. Okay, and this is like this expansion, this red candle, bearish candle extension is on the 3rd phase. Remember, it's a 3-candle move. A 3-candle move higher, a 3-candle move lower. What generally happens after a 3-candle move? And while you think, let me just, just give me 2 minutes. 1 second. Sorry guys to keep you waiting. So a quick one. So generally what happens after a 3-candle move? Test. Anyone still there?
Yes.
Okay, can anyone else hear me? Okay, no one wants to answer? Okay, I'll answer. So after a 3-candle move, generally speaking, you get a reversal. Okay, just the way it is. So if we can get down towards these levels here, then you should get a reversal bounce either from the lower Bollinger or from the lower channel. So this is a level where you don't want to be short unless it breaks. And I believe that from this level here and this level here, we should get a sharp bounce, which could last 15 minutes, which could last an hour, which could last, well, I don't think it's going to last a day. Whichever the case, the slow stochastics need to get oversold. Very simple. So just in summary about this particular chart, which is of critical importance to all of you, and I'm not trying to make you guys like serious technical analysts, and my job is to basically project all the alerts and everything. But what's important is that at least when I'm putting the alerts out, you have the basic understanding of what these levels are. You've got a downtrend channel here. It is now, it kissed the downtrend channel. It could possibly bounce from here to pivot. If it fails the pivot, you can certainly bet that it's going to take a nosedive. First level of support is right here. Second level of support is this major level of support that we encountered back on April 4th, which was April 3rd actually, right? April 3rd was, well, Monday. So that's one. If we bounce from here, that means a strong level of support. And then if we break above the pivot, then we have resistance here and possibly a move higher. The 2380 level at this point, I don't think is sustainable unless there is some major positive move and some positive noise, i.e. news and stuff regarding the economic numbers or tax plans coming out, which can drive it here. If we do get up here in the 2380 level, I can assure you at that point the market will bust a move and get up to 2392. Because by that time, the heavy shorts who are shorting all the way down here will cover very hard and basically panic. And that will be a trend reversal if we move above and into this, what I call the bear kill zone of this channel. So there's an uptrend channel, there's a downtrend channel, there is another downtrend channel here. That's all you got to see. It's not that hard. There's a pivot, which you have to watch for. Internals, you got to watch for this. And of course, I point that out. I would love to see it come down here before we get a nice sharp reflex bounce. And if we do get down here, you basically buy with both hands down for whatever time period. And I'm not talking about days. I mean, fast move. If we get down here, if we get one of these moves, that means the sell-off is over for now. Period. And if we get down here, we already calculated how much the markets are going to be down. The market is going to be down roughly about 150 points, maybe a little bit more from this level to that level, and you would get pretty substantial oversold conditions for a technical bounce. We are not going into a bear market. This is a tactical retracement from overbought conditions. Let's take a look at the VIX, which is which is sort of the critical indicator of what is going on behind the scenes. You see a move on the VIX like that. Last time that we saw it was here on the 21st of March, right? And it looks pretty similar to that. And the most that the VIX got up to was 13. And I did point that out. Is everyone clear on that? Yes? So
Yes.
this level here, guys, it's not rocket science, which is slightly, because you're looking at this here, the bears will say, oh my God, look at those candles on the VIX. We're just going nuts. We're not going nuts, okay? Over 15, that's when excuse me, that's when the market's going into a multi-week bear trend, bear market. I mean, multi-week pullback, over 15. But because this is major resistance for the VIX. And look how beautiful it looks here on the quad platform. Love it. Now, this is the hourly chart. So for shorter term, tactical traders, the hourly is starting to get overbought, but not yet. You can see that. The slow stow, Mr. Slow Stow, as I call it, is getting up there. Once it gets up there, Once it gets up there, like it did from here, at that 1360 level or so, is where you're going to start taking your profits on the short side, in my opinion. My opinion, this is going to happen very quickly. And the sooner it happens, the better off it is. Once it happens here, expect a pullback. Now, this is a short V-shaped move. The pullback can be a little bit of a consolidation channel, and then a breakout towards the 15 level is a strong possibility. We don't know that yet. We don't know that yet. So whichever the case you slice or dice it, the VIX is getting into this zone real fast, real quick, and I want it to happen quicker than more. I don't like dragged out situations. I like to see things move fast, and luckily my buddies on the Algo HFT side want things moving really fast. So that's it. Over 15, that's a trend change. What is a trend change or a TC? A trend change is basically when the markets decide to change the directional bias and say, okay, we are now going to be on a multi-week downtrend. I don't think the market's ready for it yet. Why do I say that? Can somebody tell me why I don't think the markets are really ready for a multi-month or multi-week downtrend yet? And I've mentioned this quite a few times. Anyone? It's very quiet. I need an answer, please. Read.
Tax plan's coming.
Huh? Yeah, that's one reason, but what is the another fundamental reason why the markets are not into that euphoric, overjoyed stage? What is the basis for it? And I've mentioned it quite a few times. Okay. We're still in a bull market. That's not a good enough answer. It's very simple. Most people are still bearish. Most people are underinvested in stocks. That's why. Come on, guys. See, I love doing these sessions because I understand that a lot of you are not getting it. The psychological basis of the market is who's really excited about the market. This is the most unloved bull market since 2009. So technically, yes, we'll have corrections, as I'm explaining to you. A 2, 3, 4, 5% correction, standard procedure, has happened multiple times, even 10% plus corrections twice since 2009 or more. Because most people are not there. That is the reason. Trillions of dollars in cash are still sitting on the sidelines. So they will buy the market after technical retracements. Just so you know, and I've mentioned this quite a few times. I've tweeted out some very powerful articles on that. So I want you guys to focus a little bit more. And at least, if you guys don't like reading, that's one of the fundamental flaws, I think, in our education system. People don't read anymore, okay? And so bottom line is, start reading a little bit. And if you don't want to read the whole article, read the first line, first paragraph. How about that? On those articles that I tweet out. I'm not tweeting that out for fun. I'm tweeting that because it'll enhance you and make you more money. That's serious. All right? I'm an avid reader. I'll read in my sleep. But aside from that, some of you hate reading. Just read those articles, at least the first paragraph. End of story. So the bottom line is most money is still underinvested. Pension funds are still underinvested. Mutual funds are overall, they are there, but not, there's some great gains on some big positions, but it's still somewhat underinvested. Hedge funds are constantly shorting the market. You look at the trader sentiment that I post once in a while from StockTwits, and I'll start posting from some other forums that I look at. You'll see they're mostly negative. That's why the market's not ready for a huge scale collapse. Am I clear with everyone? Yes? No? Okay, good. Bottom line is very simple. Over 15, you're looking at a fundamentally different picture, and this is what the picture looks like. Okay? So here's your picture of the VIX. we have been what they call, as you keep on hearing in the news, in a very low volatility environment. A low volatility environment is normally connotated as anything below 15. Okay, so what happened, you know, so if you take out all these lines here, I'm trying to clean out some lines here. Hold on one second. Boom, boom. That's cleaner. And I'm just leaving the lines which are generated by the computer, not by me. Okay, so when you look at this chart here, it's pretty easy to see at what point there is a fundamental trend change in the market where you short every rally for a bit. I mean, for while, you know, you can basically, like they say, whack-a-mole, you know, is right above here. Over here, we have basically major danger. I'm going to put it as a lightning. Okay, that's it. That's how the markets look at it. Now, this is a daily chart, and please, this is a very important chart. Okay, this is starting to basically bottom. So the trading range is 15 to 10. Above 15, short every minor rally that comes about overall in the market. But right now, we have a major bullish engulfing candle, reversal hammer in the making. Now, lots of reversal hammers have happened, but then it gets whacked down. And where does it get whacked down from? 13. So the VIX 13 is something, 1360 or somewhere around there is something to watch out for. I'll be posting the VIX more. And I think this will be a critical indicator for you guys to manage trades on the front side. That's it. End of story. Last thing I'm going to show you guys is the IWM. It keeps on trying, and it just doesn't do it. You know, the few IWM RUT calls I had, bumped it out in the morning, made some little money. SPX really went berserk, but the IWM just failed, made some. And you can clearly see here that it is not in good shape. So let me just clean it out. That's why this is, Reed, you said that, you know, you wanted to, I said that's the one that you should be shorting more so than anything. Okay. And this is where I think most of the opportunity lies, both on the upside and in this particular case, the downside. Take all these lines out, make this big. Does this look like a chart? This is always I ask myself, does this look like a chart you do want to buy? I don't think so. You don't want to buy it till it reaches down towards the 132.60 level, which is a level of critical support on the IWM, which comes to about 1320 or so on the SPX. You don't need any technical analysis. Just show your kid this chart and say, hey, does this look good? Did you buy this? You know, if you had to buy this, would you buy it here? I'm sure your kid's a very smart kid for people who have kids. I used to actually do this test with my kid when he was young. Now he's a strapping fella of 18 and going to college. And his favorite word was yuck. Okay, so bottom line is this is a yuck chart. On that note, I'm going to open it up for a couple of quick questions, and then I shall retire for the evening. So go ahead. And by the way, all internals are pointing down too on the daily, on the IWM RUT. Quick questions. Transports didn't do well either. Yes, that's correct. I didn't cover the transports, but transport didn't do bad either. Transports, Dow Jones transports were only down 0.05%, and the actual transportation average was only down 0.13% versus 0.3% for the S&P 500 and 1.17% downward thrust for the Russell 2000. So which one do you go for the kill on the short side? The one with the biggest decline. Any quick questions? K-Bot? No one? My kids are noisy. Okay, that's fine. They probably like my charts. Do you have any quick questions? Noisy kids are good. That means they're intelligent. All right. So guys, I will. I hope this was helpful. I know it was extremely helpful to me because it makes my brain work a little bit harder when I explain to other people what I'm seeing, and I'm sharing pretty much everything that I'm doing. I do a whole bunch of other stuff that I can't share because of time commitments and manpower or woman power, whatever the case. Bottom line is, it's pretty clear, cut and dry what my charts are saying. In the meantime, there's going to be a lot of zigzags, but please, please focus on the technicals. And some of you who are not, who are seriously serious about of moving ahead in this business, which is a business, trading is a business. It's not a pastime. Sign up for the advanced coaching sessions. I'm always willing to spend hours working with people, and I would love referrals. And the only last little complaint that I have for most of you, which is just a friendly complaint. You have a great day. You have, and you have something like, you know what I'm putting through. I'm doing my best to help everyone. Precision stuff. Take 5 minutes and do a little shout out. Whether it's on Stock Twits, whether it's on any other forums that you're in, whether it's your own private Twitter feed, wherever. Write a little feedback testimonials. Why? Because we have organic marketing. We're a pretty exclusive service. So, and it also shows that you are respecting a lot of the work that I'm doing. So that's all I got to say. Don't diss or disrespect people who are trying to help you. On that note, thank you for all your support. See you guys all tomorrow, and good luck with everything that you do. God bless you all, and God bless the USA.